Good morning to all traders. Today we're breaking down the Dow Jones. The index just suffered its worst day in a month, dropping, distancing itself from the 50K psychological level. Um, the trigger here was pure uncertainty. The Supreme Court struck down President Trump's tariffs last week, and the government officially stops collecting actually today. But instead of a relief rally, the market panicked because Trump immediately threatened new 10 to 15% replacement tariffs, and investors are nervous. He's going to use tonight's State of the Union address to double down on his trade war. Markets hate uncertainty, and that fear of a new aggressive tariff policy, of course, is exactly what drove this sharp sell off. So let's look at the daily chart to see what this news is doing to the technical structure. First off, getting kind of rejected and holding below the 50K is definitely a short term sort of bearish bias signal, let's just say. But the biggest story is the top end structure. Notice, for example, how we picked in the middle of January at around the 49.70-75. Then we had a peak at the record high of 50,600. And then following the recent attempts to break higher, we've also had a top in structure. Okay. So this price action is curving out what looks exactly like the right shoulder of a, well, I would say significant head and shoulders pattern. So if the tariff fears push us lower and we break the neckline of this pattern, which sits, by the way, where we currently had received a bounce at, right, over that territory over here. This is a very important level, that 48,770. So if we are pushed lower, the measured move, which is the distance from the neckline to the head, actually we can do it from the top to the bottom in this case, would, based on the breakout point, of course, bring us down the 4670 area. It points, of course, right down to the 47 initially, and then we have that support. If you pull out the Fibonacci retracement level from the bottom of 45,750 all the way to the record high, you're going to see that this lies at 78.6 Fibonacci retracement at 46,800. So that would be a very deep dive. But here's a technical catch you need to keep in mind. In a broader bull market that we currently are, a head and shoulders isn't always a massive trend killer. Often it just acts as a short-term reset before the trend continues higher. So because of this, the most critical level to watch right now, or I mean, if we do see that neckline break, is the 61.8 Fibonacci retracement at 47,600. When aggressive news-driven pullbacks happen, they typically come to a dead halt right at this golden ratio. So if the Dow drops into 47,600 and we'll start seeing buyers step in, it tells us this is just a healthy correction and the broader uptrend is gearing up for a continuation. Now, pay also attention to the RSI because a drop from the 38.2 Fibo, which by the way is where we stopped now at the neckline, this drop to 61.8 or 78.6 would also mean downside momentum is going to, increase. Are we going to get down to the 30? It's unlikely given that last time we stopped at 35 and the one before and one after that, sorry, at 37. So we would some sort of pull out an average between all of these. Let's say right now we've come to the 45, you see, we are below the 50, obviously. And then in between these two, I would say an average would just be around there. So we're looking at around 40 perhaps initially to see. So maybe we're going to see a bounce, okay? And the 23 or any other level holds. Okay, so how we trade this? Well, if the breakdown below the neckline confirms, a short position makes sense here, right? So the stop would go right above the uh, the top, the shoulder top, and the take profit, of course, would be the 78.6. However, for take profit, we would prefer to work in two or even three stages, with one of the targets definitely the 61.8, another one partial profit, maybe the 50%, and then letting the rest run at 78.6, perhaps with a trailing stop, because the 78.6 maybe is not going to be where we are going to head towards, if that makes sense, because it will be too deep. But don't forget, it's a cluster. It aligns perfectly with the 100%, with the measured move of the clown. It's the 100% Fibonacci projection, by the way. So two completely different methods pointing to the same level. That makes it a very compelling target.